Back in June 2023, there was a lot of fear being spread because HMRC, those tax guys, started saying that fractional shares were not allowed to be held within an ISA. As a lot of us were already holding fractional shares in our ISAs, I made a video about the topic and predicted that we're likely to be okay, as HMRC was being a bit nitpicky about the whole thing. Well, after a year or so of back and forth, HMRC has now dropped the case, and in this video we'll cover why this might be big news for small investors. Hello and welcome back to the Dividend Experiment, the channel that helps you build a portfolio that pays your bills. The content that we discussed is intended for information and educational purposes only, and should not be considered investment advice or investment recommendation. So in this video we're talking about what's changed, who will benefit from the change, why they've backed off, and what this means moving forward for investors like us. So what's the issue? Last year, HMRC argued that firms and investment apps offering fractional shares within an ISA were acting unlawfully due to the use of derivatives in ownership. They believed that fractional share ownership shouldn't be permitted from a strictly policy perspective. This argument went back and forth among stakeholders until the recent news and conclusion. The recent news was that HMRC finally gave up and reversed its position, allowing fractional shares in ISAs due to the increasing demand for accessibility in investing. This is a big win for us or anyone using a Trading 212 Pi within their ISA, as those are pretty reliant on fractional shares. And talking of Trading 212, I asked Trading 212 if they could give me a unique code that you guys can simply type into the promo code section, capital at risk. So if you've opened a new account recently or planning to open an account, then here it is, DivXP or DIVEXP, short for the Dividend Experiment. So you have 10 days from opening your account to type this in and receive shares worth up to £100. I also get something as this is my custom code, so this helps you support the channel too. And this change in stance on fractional shares was part of a broader effort to modernise tax rules and align with market trends. Now that it's not an issue, here's why dropping the argument and reversing its position is good news for investors. First, let's talk about how these fractional shares work on ISAs. If you're not familiar with the concept of fractional shares, let's break it down. Normally when you invest in stocks, you purchase whole shares. For example, if a stock is worth £1,000, you'd need that entire amount just to buy one share. However, if fractional shares allow you to buy a fraction of a share, like 0.25 or 0.5. And this means that instead of paying the full price of a stock, you can invest with just a portion of that amount. For example, if you only have £250, you can still own a piece of that £1,000 stock. This concept is a game changer, especially for small or beginner investors who don't have a large sum of money to invest up front. It allows them to own portions of high-value stocks they might not otherwise be able to afford. This makes it easier to diversify your portfolio without needing thousands of pounds right from the start. Fractional shares also let you invest in expensive, well-established companies like Apple, Amazon or Google, even if you can't afford the full shares. HMRC's reversal meant that fractional shares are here to stay, and investors who had been worried about the potential loss of tax benefits could finally breathe a sigh of relief. This was a significant victory for platforms that offered fractional shares and investors that use them. What this means for investors. Impacts on small investors. For small investors, this is fantastic news. If you've been using fractional shares in ISAs to build your portfolio, you can now continue without any fear that you'll lose your tax advantages. It means your investments in fractional shares will still grow tax-free, and you won't have to change your strategy just to comply with confusing tax rules. It also signals that regulators are beginning to acknowledge how modern investing works, making it easier for small investors to thrive. More accessibility. This also means that the stock market remains more accessible to everyone. Before fractional investing, many people were priced out of certain stocks simply because they were too expensive. Now, instead of having to save up for months to buy a single share, you can invest whatever amount you have, even if it's just £50 or £100. This allows you to gradually build a diversified portfolio inside your ISA without waiting on large sums of money. Potential growth. With HMRC stepping back, we may see even more platforms offering fractional ISAs. This will give investors more options to choose from, allowing them to find the platform that best fits their needs. Platforms offering fractional shares have always been a huge advantage for small investors, and while some already offer this feature within ISAs, others, like interactive brokers, could potentially expand to this option soon. Now that HMRC has basically said that it's legit, I think we'll see the more comprehensive brokers such as interactive brokers start offering them too. In addition to stocks, interactive brokers provides a wide range of investment options including ETFs, bonds, options and mutual funds, making it a versatile platform for various investment strategies, So I think it's highly likely that now that it's been approved, it will offer fractional shares within its ISA too. I've left a link to an interactive brokers in the comments too, in case you want to check if it offers some features that your current broker doesn't. Conclusion. To sum it all up, the debate over fractional ISAs and their legality is now a thing of the past. HMRC has admitted that fractional shares are completely fine to hold within an ISA, so investors can continue building their portfolios without the fear of losing their tax-free benefits. We can chill out on this issue finally. And this is a huge win for small investors, financial platforms, and anyone looking to make investing more accessible and flexible.
If you liked this video, and if you made it this far, I'm guessing you probably did, then I have some good news for you. I'm giving away my PDF guide to the 10 dividend investing commandments, or the criteria that I use to pick dividend paying stocks, and I'm giving it away to you for free. All you need to do is submit your email in the link below and it'll get delivered to your inbox straight away. Again, that's for free. But that's not the only benefit of joining the email. You also get updates on the almost daily dividend portfolio, interesting stock ideas or news, and special deals and free stuff that I can share with you. Thanks for watching, and I hope to see you on the next video. See you!